Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, the market has formed a very interesting thing called a golden cross. And why am I so excited about this? Well, one of the things that the golden cross shows is it shows how the market can possibly be going higher in the next few months. Now, I know that everyone's doom and gloom out there, but it does appear something very interesting is happening, and that is this is called the golden cross. And why am I so interested in this? Well, typically this shows the market data has shown that in the 6 months after a golden cross, typically the market will go up at least 4.5%, and then in the 12 months 10%. So we could be starting a rally here. Very interesting. Now, the question is, what is the golden cross? Well, if you look at this red line here, you'll notice it's moving above the black line. And this is on the S&P 500. This is the index, the S&P 500 index. So it does appear like we may have a golden cross. And this would be very interesting because if this does indeed happen, we're likely to see a lot of nice action in the market. I tell you, I was trading today and did some trading. I sold some AMD. I sold some of my microchip. Took some profits there. But it does look like we're looking at a situation where we can possibly make some money here. So without further ado, I kind of want to show you what this golden cross thing is. And let's see if we can put that full screen there so that you can see it. But here's what it is. The golden cross is basically as the 50-day moving average moves above that 200-day moving average on volume, and you'll notice that we definitely have some volume there that's coming into that's coming into the picture, and that is indeed a good thing. I slipped to the other slide. There we go. We're back to the golden cross slide. Well, so what does that mean for us? Well, that means that we should be getting our ready lists, because it does look like things are going to happen. Now, here's kind of my take on it, and possibly this could be the way it works in the next, say, few months. This is the S&P 5. This is the spider, and this is the S&P 500 ETF. And you'll notice there's a top line there. That's at about 431. Let's see if I can get that into the screen there. Yeah, that's at about 431, and the bottom is about 390, and we're in the middle about 414. So this is the range that I'm looking at in about the next 2 months of where I think the market is headed. And I definitely think it's headed at least up to this top range here, and then it may consolidate down. But the general trend of the market is upward. So very, very interesting when you look at it that way. So right now is a time basically to be looking for opportunities, and I think there's a lot of opportunities right now in the chip sector. And that is another area of the market that I think is showing some very, very good promise is in the sector for shoes. Believe it or not, I bought Crocs today, and it's doing fairly well. So I want to show you that. I want to show you that slide as well. So here's what I'm currently in the market. Here's my current holdings in the market. As you can see, I have AEHR Systems. Now, AEHR is a test equipment company for the semiconductors segment. It was up significantly today. It was up 6.32%, or about $2.18. So very nice move on this one. A lot of volume coming in here as well. This is what I'm talking about, the golden cross. I'm also in AMD, and that was up 4.34% today, $3.67. Amcor Technologies is kind of an interesting stock. This was up as well, about 3%, a little over 3%. Now, I did have some that were down. I did reduce my position in Chevron. It does look like the oils are pulling back. So very interesting situation there with that. So it does look like the oils are pulling back. Also, I was in on semiconductor today. This is one I definitely really like. It's huge volume increase, 65% over normal. It was up 5.5%, or about $4. 28 cents. And then also Impinj, and this one was down a little bit today, but this has been up significantly over the last few days. So very strong action today. And before we get to the questions, I just want to reiterate that now is a very good time, I believe, to be in some of the semiconductor stocks because it definitely seems like they're making a move. Now, not every semiconductor stock is made equal. That's definitely for sure here. I want to kind of also show you what my allocation is, my portfolio allocation. Now, I'm still largely in cash. The reason for that is because I did take some profits today as these broke out. I typically like, when they break out, I like to take my winners if they're up 5 to 6%, take the profits, and then look for other potential winners. You'll notice that I still have a lot of dry powder here. I'm not fully invested. I'm only about 65% invested, but hopefully we're going to find some good opportunities as they come up, probably tomorrow, and just look at it that way. All right, so here we go. This is on semiconductor. This is one of the ones I did buy today, and I want to kind of show you the chart on it because I definitely think it's very worthwhile taking a look at. You'll notice it passes on all of my criteria here, and also it's coming out of this formation, this cup formation. I bought it today at 89.90, and it was up a little bit in the after hours trading. This is one I still think it's a little extended here, but I definitely think you want to take a watch on this one. It was up in the after hours. It's been trading at 81.80, so it was up. It traded down. This should say 80. This should say 90.89. I've got this back. So, anyways, as you can see, it did trade up. It did trade up today. I make these slides sometimes very quickly. Let's see exactly where I am on this one. Yeah, okay, there it is, on semiconductor. Yeah, I was at 80.90 on this one. It was up about $2. That's where my buy was on that one. But definitely one you want to possibly take a look at. So very strong chart. All right, let's take a look at the questions. Thank you so much for taking a look today. Hey, Jim. FTI dropped today. What do you think? Well, I don't know. Let's take a look at FTI. And bring up the chart if we can. And it's a Thermo. I think this is right. This is Thermo Fisher. Great company. But again, just let's take a gander at it. See if I can get that. There we go. Thermo Fisher. Just for the people on TikTok. There we go. Perfect. Okay, so this is Thermo Fisher. Why did it come down and test here at the 21-day exponential? This is one of the reasons why, everyone, I try to buy within 5% of this 21-day line, because typically what'll happen is when there's a test, it'll come down and it'll hit that, and it'll move. Now, one of the things about this one, Techno FNZ, I don't know this company, manufactures services for land and sea offshore. Yeah, what's been happening, interestingly enough, I've been seeing a little bit of weakness in the oil field services. It's still the number one, but a little bit of weakness there. So I'm not sure exactly what happened here, but I definitely think that people are starting to see their profits, and they're starting to unload a little bit. We definitely, if you can see, the relative strength did move down from today to today. So it moved down. It was about 99. It's down 96. Still very strong. I definitely think we're probably going to get a bounce here, but I would try to stay out of this area for right now, just because we're definitely seeing a sector rotation we're seeing some money move out of this area and into some other areas. This has a good checklist, 78%, but I can't give you an exact reason what happened exactly on this one because I haven't been following it. But I definitely am interested in taking a look at AMD because I own AMD, and this is one of the ones I think that you ought to be taking a look at because this one is still, I think this is still actionable. Let's see, AMD, and this is for one of our TikTok viewers here. And so let's go to that chart. There we go. All right. So what happened here? I think you can see. I think you can see this on my screen here. Hopefully, you can see the screen here. You'll notice that after earnings, and this is something that I think now that we've seen the golden cross, we'd have to start looking for. But after there was a tremendous spike here. Now I bought it as it crossed basically right above the 200-day moving average. As you can see, it kind of came out of this base at about 70, at about 78. It came out of this base, and then it's moved up. This is the second day. It's moved up. Now it's off a little bit in after hours, 88.91. Now the question is, let's see kind of what the chart pattern was for AMD here. Yeah. Okay. So this was earnings here. You can see we had a nice little gap up here, then up, and then boom. We closed the day at a high of 98. Now it's off a little bit after hours, but I'm pretty sure that this will continue an upward trend. Here's what you might want to do if the only thing about this stock right now is it's a bit extended. If we look at the chart, so let's see. Let's take a look at AMD. I think this is a little bit too far up, a little bit too far off to possibly get into, but I'm not sure. Let's see. Look at the 21-day line. Okay, yeah, we're 18% above that 21-day line. Probably can't buy it here. This probably will adjust down. What I'm going to do instead is I'm going to push my stop loss up so that if we do get a pullback, that I'll be out with a profit. But this one definitely is buyable. Here's the one you got to be looking at, 79, right there, basically right where the 200-day moving average is. I still think this is actionable, and but it's been up 1, 2, 3 days in a row. It may be up the fourth day, but usually on the fifth day you're treading water. So I would be a little bit careful about buying this. Wait for the pullback, but this will pull back. But it definitely looks like this is in play right now. Normally, I have not been in this because it's been so weak. It's under. Typically, I don't like to buy anything under this 200-day line. As you can see, I bought it right as it moved above that 200-day line. So that's a good place to look to buy AMD. So I would wait on AMD for tomorrow. I wouldn't buy it tomorrow. Let it pull back a little bit and see if there's anything. If there's anything to do. Yeah, this is a question from Jokester. Jokester, like that. Isn't AMD overextended now? Absolutely it is. You're absolutely right about that, Jokester. We're about 19% above the 21-day exponential moving average. Typically, we want to buy within 5%. So I totally agree with you about AMD right now. I definitely think it is extended. But here's the thing: it's going to pull back. When it pulls back, it may be time to buy it. If you can buy it within 5% of that 21-day moving average, then it's definitely worthwhile. Now, where is that 21-day moving average? The 21-day moving average currently is at 70. Let's see, 73.99. So 74. So currently, if it pulls back basically to about 70, 75, I don't know if it'll pull that low. That's a good place to buy it. But we probably don't want to buy it right now. It is extended. You're absolutely right. But there's starting to be some strengths in the chips. All right, here we go. How is Meta and Amazon looking for tomorrow? Okay, good question. Meta is going to do a stock buyback, and it jumped absolutely. It was crazy today. Unfortunately, I was not. I was not in it. I wish I was. That would have been a great thing. This gapped up, and let's take a look at that chart so that we can see that kind of how Meta is looking. This is the chart for Meta currently. After hours, it's down a little bit to 186. But what happened was it not only did it move right past the 200-day moving average, it moved right up to the 50-day moving average. Now I want to show you something really interesting here. You see this line that I've drawn in here? This is a reversal line, and I kind of want to show you how that looks, so you can probably see it. Hopefully this will show. No, it won't. But this is this is why they knew where to open the bid. You can see that there you go, right as it passes above this line here, and this line that I'm talking about is the 40-day week moving average. That's where the programmatic traders come in and buy it. Very interesting, just kind of an illustration there. Now the question is, what's going to happen tomorrow? My guess is it's going to fill the gap and it's going to move down. Okay, so what it's going to do is it's going to come down tomorrow, probably, and it's going to be really tough. I would be watching this one. I wouldn't be a buyer tomorrow, but I definitely think that we're probably going to see it move down, probably to about 160, 165 tomorrow. It's going to fill this gap between here and there, and so that's kind of what I think is going to happen. But I think this was, a reaction, to basically the fact that Meta is going to be buying back its stock. So this just kind of shows that something is going on here. Let's look at Amazon too. Take a look at that one. There we go. Amazon, also, you'll notice it moved right up to that 200-day line. This is why this 200-day line is so important. Okay, that's why it's so important. You notice how when it gapped up right to the line. So very, very interesting. I'm going to show you the 10-minute chart here, but you'll notice this 109 area here. We're looking at Amazon right now. This was the gap up, but you'll notice that this 109 corresponds very closely. Oops, did it get it? No, it didn't. Let's go back over here, show you where that corresponds to. That 109 price corresponds very, very closely to the 200-day moving average. The 200-day moving average is 112, is $112 a share. And you notice it gapped up basically to 109, so almost right at the 200-day line. So this is why typically you don't want to buy a stock if it's below the 200-day line. But when there's a gap up, it's usually going to gap up to the 200-day line in a situation like this. This is Amazon here. Now the question is, can you buy it? Well, let's go back to the 10-minute chart and take a look to see. I think it's going to pull down tomorrow, possibly as low as 109. And if it hits 109 and reverses, that's where I would probably buy it. But I'm probably not going to be a buyer tomorrow of Amazon, just because I still think there's better places right now in the market. I think that are going to move even better, and that is the semiconductor area that I've been focusing on. So I also did buy Crocs today, which is interesting. Very good question, Adam. Definitely agree with you here regarding regarding this about the price of oil. The price of oil is coming down. It does look like we're getting some more supply. Very interesting. And because of that, I think there's going to be a movement. I reduced my position in Chevron today. I think we're going to get a shift of capital from some of these bigger oil sector stocks primarily to the chip sector. It just seems like that is where I'm seeing most of the action. Now, let's take a look at the price of oil, of crude, this kind of just so we can see it. The price of crude, this is crude oil here, this is the crude oil chart, is, as you very well point out here, the price of crude is moving lower. There's just no question of it. It's moving lower. And it's definitely moving down. And today, you know, it's on a downward trend. It's below the 200-day line. It's below the 50-day line. So it does look like we're going to get at least for a while a pullback. I don't think it's going to last forever. I think it gets down here to about 71, $72. That's where we're going to see an increase in the price of crude oil. But for right now, you're absolutely right. The price of crude is moving lower. So definitely want to be concerned about investing in the oil stocks right now based on that. Oh, here's a question. I'm just typing here. Putting this this in here. So there we go. Send that to the person on TikTok. Just learning how to use all these controls. So sometimes it doesn't look as good, but I'm trying to get as much information out there as I possibly can. All right, let's take a look. Google shorted it. This is Troy. Really like that's an interesting way of looking at it. Let's look at Google. It's probably it may be a good idea because what's happening with Google, of course, is they had a big announcement of layoffs, and it's the question is it gonna pull back? I hope, Troy, that you shorted it as it made its higher high here. I'm not right now. I'm a little bit leery about making any shorts just because of the way the market is running. The market is running up, so I'm not short anything right now, just because of this golden cross on the S&P. I think that we're in a situation where it might be it might be a situation. So be careful with this short on Google. I definitely think that we may be headed to something that we don't want to see in terms of we may get a dead cat bounce on Google. I agree with you. I don't think Google's that strong for a lot of reasons, but I mean, look at what happened with Meta. So it's just the kind of thing we've got to be very, very careful. All right, here's a question from Jake Star. I guess that's it. If you have time, is Peloton worth buying? Absolutely not. Let me just take a look. Let's take a look at Peloton, everyone, just to look. I think it's Peloton. What is that? Peloton. That's the symbol, PTON. Now, I shorted Peloton earlier this year, and let's go to the charts for Peloton. See if I can bring that into view here. We did get a dead cat bounce above the 200-day line, but I am just really leery about this one. Here's the thing. We did get a bounce. I think this is kind of not necessarily a good, even though it was up and it was up significantly. I just think that this is a dead cat bounce here. I don't like the stock. It's just, I mean, look at this chart. It is horrible. We're looking right now at the weekly chart. I just don't think you want to own this. If we draw the reversal line, it definitely has reversed higher, but the thing is, it's lost so much of its value. I just think I would avoid it because I think this one could easily go out of business. Here we are looking. I'm looking at the at some of the fundamentals on it. Just not really good. There we go. The profits were, the sales have been down. The profits, are non-existent. So sales are going down. and they don't have any profits. I think you just gotta, I just think you gotta sell it. It's kind of like Carvana. I think that it's just not going to be something that's going to work. I just don't think it's going to work. So be super careful, super duper careful on that. All right, Andrew, let's look at Apple. Apple did move very nicely today. They had great earnings. That's one of the reasons why the Nasdaq popped today. That's why it was the leading. It was the leading indicator today. They did show some very nice numbers, and it did look very good today. So let's go through the numbers for Apple. Definitely think it's worth looking at here. Let's see if it's going to give me all of the. See if I can get all of the boxes here. All right. So let's see, it's weekly chart. There we go. Okay, so here we go. Very nice action on Apple. This shows that, this is the reversal line here that let's see if I can put that up there. So you can see it, this black dotted line is the reversal line. We've moved above the critical 200-day moving average for the first time, basically, with strong volume. And it just looks very, very good. I definitely think this is going to continue. The question is, can we buy it at this point? I don't know if we can buy it, but let's look at the technicals here. We're a little extended. We're 7.5% above the 21-day line. That's a little bit. That's a little bit high. So I wouldn't buy Apple at this point, but I'd put it in. I would watch list this one because if it pulls down below 5%. On that 5% on the 21-day line. If it pulls down basically closer to the 21-day line, which is about 140. So if it pulls back, if it pulls back, to about a 147, 146, that's where you want to buy it. I definitely think it's going to correct lower today. The 200-day line, it's going to, it's very close to the 200-day line at 47. So if it moves to about 48, 47, 48, that's where you want to buy it. But I'd be careful. I wouldn't buy it on the open tomorrow. But it does look like it's showing a lot of strength. So if Apple shows strength, that means that the rest of the market is going to show strength, at least for now. So definitely something very interesting there. All right, let's look at ON Semiconductor. This is for Lisa. I bought ON today. Actually, I had a limit order on it. This performed very nicely, and this is the kind of stocks that you want to definitely take a look at. There we go. All right. So very nice. As you can see, this is my mark here where I bought it. I basically bought 100. Just the first buy at about 80, 90, and we're up about 82. So even though this was, I think, extended here, I got the reversal line here. What I was looking at wasn't that, it was the higher high, which is right about here. So I think this is likely to adjust lower tomorrow, but this is why the chip sector is the place to be right now, because you can see it's raising. This is the relative strength line. It's this blue line here. It's moving up, very good. It's 95 relative strength. It may be higher tomorrow, so that's looking very good. There are earnings. This is a warning here. There's earnings in 4 days. So if I'm not up 10%, I will sell this one before earnings. I'll sell it in 4 days. But I really like the action on this stock. I really like the action on this stock, and I like the area that it's in. The area that this is in. Let's see if I can get the boxes up. There we go. So this right now is the semiconductor manufacturing area is not the strongest area right now, but it's improving, and it's improving quickly. So this is sort of where I've been seeing a lot of strength in the market. For some reason, I'm not getting it's not letting me click on that. Okay, all right. But looking at there we go. looking at on semiconductor, definitely a good place, to be in. Now, would I buy it tomorrow? I think it's going to correct a little bit lower tomorrow. I definitely like this area of the market. On semiconductor is one of the leading stocks currently in this area. Microchip also, MCIP. Uh, uh, Microchip, that's another one that you want to take a look at. I did sell it today, but looking also very good. All right, let's take a look at more TikTok questions. Um, all right. Let's see. It's too late. Amazon puts. Yeah, I wouldn't do Amazon puts. By the way, I'm looking at the TikTok here because I think they're just too expensive right now. So be very careful on this. How about Docu? This is DocuSign. This is one I really liked during the during the uptrend. I really like Docu. Let's take a look at it. DOCU and in there. So with DocuSign, let's move it over here. We're starting to see it move above, again, that critical 200-day moving average. This is what's happening now that we've got the golden cross on the S&P. We're starting to see all these stocks move above the 200-day line. Now, I'm still not a buyer of this one yet, but I'm getting really interested in it. Why? Well, because it's looking pretty good. Now, it's a little extended. It's the 21-day line is 58 on this one, so it's a little bit extended. But I do think that this company really does have a future. And let's look at the fundamentals on Docu to kind of take a look here. They're coming up. They'll report in about a month, but they've had very good growth, but they have been losing on their earnings per share. So this is a concern for me. If we look at the overall chart, the question is, has it turned? We're looking at the weekly chart here. The question is, has it made its turn? Well, I don't think it has yet. I don't think it's made its turn because I think what's going to happen with Docu, and I drew this here. Now you can see these were where my, I was buying it on, at the very top, but I haven't touched it since. You see, now I think you got to wait on this one. I wouldn't buy it until it was at least at 90, and the reason is because this is what they call the reversal line. So I have to say on this one, I think you got to wait. There's a lot of overhead supply. Here's the problem: as this comes up, a lot of the people that bought it up here are going to be selling. So be very careful on DocuSign. I don't think it's a buy, and I think you got to be super careful on it. All right, let's look at MRC. MRC. Okay, so oil and gas. Let's kind of see what kind of data it has. Oh, nice movement today. 93 relative strength. So that's pretty good. I definitely like this chart on the weekly. Let's look at the daily to see what's going on with the daily chart. Yeah, this is not a bad chart. It's a little extended because that's the 21-day line there. So here's the thing. I like the stock. But I wouldn't buy it. It's too extended. It's 12. It's actually pretty close. It's on 6% above the 21-day line. You probably could size a position here. It's coming out of this consolidation. There's the consolidation. So I'm a little bit worried about that, but it seems to be moving right up very nicely. I don't know. I probably would not be a buyer here, but I like the stock, and I like the fact that it's just doing very well. Oil and gas, machinery. The problem with this area is with the price of oil moving lower. There we go. With the price of oil moving lower here, I think you got to be super careful on this one. Even though this looks like a very good chart pattern, it does look like a good chart pattern. But I just think you need to watch this one. My primary reason is the oil area is starting to weaken a little bit, and I think we've got to be very careful about our oil buys right now because the prices are moving lower. So that's kind of my look there. All right, we did Amazon and Apple. All right, let's probably take the last question here. This is for this is IMAP. Wait a minute. No, ICID. Okay. How about BA? Okay, let's do BA. That'll be the last chart for today. Good stock, Boeing. I definitely think it's time to, if you, depending on how long you've been in this one, I missed this upward trend. I mean, I knew this. I knew it was happening here, and I didn't jump into this one. That kind of irks me a little bit because I knew that it was starting to make a nice move. Let's see if I can get this. There we go, Boeing. For some reason, it doesn't want to give me the, let's see if it'll give me the dailies. There we go. So here's the dailies for Boeing. All right. It does look like we pulled back to the 21-day line. Here's what I don't like about this one. The relative strength it's losing relative strength against the rest of the market. It's down to 91. That's still excellent, but it's losing strength against the rest of the market. There was a golden cross on it here, as you can see, but I definitely think that right now it's sort of in this consolidation phase. What I would do on this one, if I owned it, I wouldn't sell it. But if I didn't, if I didn't own it, I would try to buy it if it pulls back to the 21-day line. It doesn't look like it's kind of like very close to there. Yeah, I think you could start sizing a position here. It's not an ideal position, but I definitely think you could size the position because it definitely looks like it's going to get a little bit of a bounce on that 21-day line, and I think that might work very, very well for a lot of people. All right, well, let's see. Oh, thank you very much for following me. Appreciate it. What IPP is a transport stock. When oil prices drop, I'm worried. Absolutely correct. Here's the thing about that. Let's compare. One of the things is when oil stocks are dropping in price, and when crude is dropping in price, you got to be careful because that could be a situation. Now let's look at the price of crude just once again. I want to look at the price of crude. Let's first of all what I want to do is I want to look at the shippers. And I think that, let's see, Golden Ocean, GOGL. This is Golden Ocean. Yeah, Golden Ocean Shipping Group. Okay. Good. It's not letting me. For some reason, it's not letting me do it. Okay. So let's look at the price of crude again. And this is why I'm worried about buying oil stocks. Okay, this is the price of crude oil currently. And as you can see, the price of crude is headed lower. So this is not, we don't want to be in crude right now. We just don't. We don't want to be in the shipping either. We don't want to be that. So the price of crude is moving down. This is, you can see this right here. This is what they call the death cross, okay? Because that's when the 50-day moves below the 200-day. That means it's in decline. Sure enough, it is. This is the price of crude oil. It definitely is going lower, and it'll probably be at about 72 shortly. It does seem like there's a floor there, but here's the thing. I don't think you want to be investing right now in buying any new positions in any of the oil stocks. That's the mistake I made with Chevron. I bought it after earnings. It had record earnings. I rode Exxon up very, very nicely, but then I probably just should have stayed out. I've since reduced my position, and that's just kind of the way the cookie crumbles there. So I think you got to stay out of the oil transports right now. I just don't think that's a good place to be. All right, let's look at AEHR. I own AEHR, and this one has been doing pretty well. I definitely like this stock. You can probably tell. because I've been in and out of it a number of times. I've taken, I've day traded this one. I still think this one is it just won't go down. It's just amazing. It was up tremendously today, but look at the volume, 16% increase in volume, 6% in terms of the price. I don't know what's doing this, but it's got a 99 relative strength. The question is, can you buy it here? I think the way to buy this one is as close to that 200-day line, a 21-day line as possible. Right now, it's 7% above that 21-day line. That's a little bit high for me. I'd like to see it, to buy this again. I'd like to see it pull back, but I definitely like this stock. As you can see, I haven't been using slim rules on this. Probably should. I'm going to set my stop loss very tight tonight, but because I've been buying it and selling it. But this is very, very strong, and I think that definitely worthwhile. I don't think it's that far extended because it's only about 7% above the 21-day line. You ideally want to buy within 5% of that line, but in this case, this has just been a really, really powerful stock. So I don't know what the deal is with it. I don't know why it's doing so well, but it is, and that's one of the ones that I've been owning. CRDO. Let's look at that real quick. Going over a lot of stocks today. Sorry about that. Credo Technology Holding. All right. Okay. For bandwidth. I don't know what this is. Actually, I don't know if this is in the. Okay, it's internet networking, which is a real good area, but relatively cheap stock. No real pattern there yet. Let's look at 21-day. It's really extended. I think you gotta probably take a flyer on this one. It's a little bit new. I wouldn't probably buy it, but it does have a golden cross. It does have a golden cross right there, and it is pulling back. I put this on the watch list. Where you want to buy it is on the pullback, and the pullback to right about here, about 1550. As it pulls back to that 21-day line, that's where you want to buy it. About 1550. It's a little extended right now. I probably would not enter a position on this one. All right. Okay. Last question is on SoFi. Oops. Let me show you that. Yeah. I wouldn't buy on this one, CRDO. I would wait until you got a pullback, probably to about 1550 on that one to do that. So that's kind of where I look at it. Last question tonight is from SoFi. That's the company that does the credit scores, SOFI, lending company. And let's take a look there. SoFi Technologies. It did have a little bit of a bounce. It's a $7 stock. I don't know. I don't know. This doesn't appeal to me. I think there's just better ocean. I think there's just better fish in the ocean, really, than SoFi. So I would stick away from SoFi. I know it's a cheap stock. I know people like that, but I don't see. I see some problems in the consumer space for that. But I'll be back tomorrow. And if you're not already a member of Dallas Trading Floor, super easy to do. Just go to this. Just go to www.dallastradingfloor.com, or if you're watching on TikTok, just go up here. Just go up to my link. Just click on that, and you'll get a special page for TikTok viewers. So that's a good way to go too. Also, I always ask, but please like the show. That helps me get out there to more people. We have a lot of viewers, but I'd like a lot more, because I do think that the mainstream media is not giving. They're all doom and gloom right now. We've moved into an upward trend, so just smash that like button so you get my signal out to more people. Hopefully, we can help them make money in this market. I've done pretty well in January. It's looking like February is really lining up well. I do think with the golden cross on the S&P 500, we're going to see a rally, but you got to be in the right stocks, and that's what I'm going to try to put out there to everybody that I possibly can. But so hit that like button. I so appreciate it when you do, and I'll be back tomorrow again. Probably with more stuff. here, and hopefully I'm going to make some more short videos so that you can see those as well. And just everybody stay warm, stay safe, and happy trading.